Hello, all. Bob Pisani here. We are here in Las Vegas at the Exchange ETF Conference. This is the largest gathering of ETF professionals, roughly 2,000 asset managers like BlackRock and Vanguard with investment advisors that buy the ETFs, all here to discuss the latest investing trends. Let's talk to four of those industry leaders. These are all-stars, folks. Ben Johnson is head of client solutions at Morningstar. Ben Slavin is global head of ETFs at BNY Mellon. Jay Jacobs is U.S. head of thematic and active ETFs at BlackRock. And Travis Spence is JP Morgan's global head of ETFs. These are the best in the business, folks. Ben, let me talk with you. I often say you're the philosopher of ETFs. Probably 1,000 investment advisors here. What are they looking to get out of this conference? I'm sure they want some help managing all the trading chaos that's going on, but what else are investors looking to get out of this conference?
Yeah, Bob, I think the advisors that are here today with us are looking for what they're always looking for, which is answers. Answers to their questions and, by extension, their clients' questions about what's going on in the markets, how do they respond. I think, importantly, who are the partners here that are represented in these halls that they can trust to give them those answers, that context, those tools, those products that help them to build sensible, well-constructed, diversified portfolios on behalf of their clients so that they can weather any sort of environment, be it the chaos that we've had recently or calmer times like we had as recently as last year.
Yeah, Ben Slavin, BNY Mellon manages a lot of the back office functions. You manage and run the plumbing here, but what I find is these RIAs really want some help also managing their business, what we call practice management. They want to know how to grow their assets under management. They want to know how to handle things like back office functions. Are they getting help here to try to do that?
Well, I would certainly agree with the philosopher here for sure. But I would also say that, it is an increasing trend where it's more and more about helping those advisors, again, with their practice, with those back office functions, which making it possible to make their jobs easier instead of just talking about products, which is increasingly becoming a noisy space here. There are an incredible number of products that have come to market, and from a BNY perspective, we're running at about the same pace in terms of both new issuers and new products. That's creating a ton of noise in the market, making it more complicated than ever for the advisors here to sort through that range of products.
Jay, what's BlackRock doing to help people here? You have many products to choose from, but they also want help managing that business, that practice management part. What does BlackRock have to offer?
Well, I think there's many aspects to this. One is product innovation is still key to helping advisors manage their business. One of the trends we see right now is in digital assets, how much advisors can help their clients, particularly millennial or Gen Z clients, who have been buying things like Bitcoin on their own, but now increasingly want an advisor to help them manage that in the context of a broader portfolio. So I think that is one solution. Another is looking at model portfolios and how BlackRock delivers really kind of entire solutions for advisors that are looking to focus more on their client. We can provide the kind of backing to that with well-constructed portfolios across ETFs in equities, fixed income, and even alternatives.
Travis, JP Morgan has the same thing. You have similar products to help the RIAs out in terms of asset management, but as I mentioned, they also want help. How do you help them grow their assets under management? That's the holy grail here at the RIA.
Yeah, well, look, I think an event like this gives all the advisors a chance to think about what's at the leading edge, what's happening in terms of trends in the industry. They also want to be at the leading edge for their clients, and understanding those trends and what's working, especially in a market which is so choppy and volatile right now. So I think one of the biggest things that we've seen, Bob, is the continued growth on active ETFs. So you think about that. Last year, about 8% of assets took in 26% of flows here in the U.S. It's already up to about 34% this year. Active is becoming a bigger part of portfolios, and a lot of advisors are trying to think about how can they start to introduce active ETFs into their portfolios for clients.
Ben Johnson, you have always been the voice of sobriety in the ETF business. You mentioned cushy penguins a minute ago. We were talking about this a little while ago, and I was asking, so tell me about all these new products coming out. You said new product development has officially jumped the shark. This is what Ben said. Remember, Ben's the philosopher here.
Channeling the Fonz.
And that there has been a proliferation of new products that cater to investors' worst instincts. So what's going on here?
Did I say that? I
did
did say that, Bob. And I think part of it is just part of the current zeitgeist, especially among young investors, that you're going to learn their lessons and going to take their lumps, no different than many of us in the past. Like, I used to think that I was going to be an exceptional stock picker, and that did not pan out for me. So, a lot of this product, a lot of the speculative product, leveraged single stock ETFs, now, product like battle shares that pits one stock versus another, long Tesla, short Ford, I think is designed to apply to some of our, or appeal to some of our worst instincts, to some gambling instincts. It's going to scratch an itch. Have at it if you do a good job of saying, I'm going to allocate 5% of my portfolio to just having fun buying lottery tickets. But I think, and I'm concerned about that vein of product development, because it doesn't anchor in anything that long-term investment should be anchored in, which is growth, which is expansion,
right,
which is investment, and benefiting in all of...
But you're not surprised that there's silly products that come out of at this point. I guess I have a broader philosophical question. Does the world really need 3 times inverse some stupidly high beta tech stock that's out there? Do we really need some of these products? And the problem I have with the industry is when I go to them, they say, hey, Bob, we're not telling people to buy this stuff. We're neutral on 0 data expiration options or a 3 times leverage inverse. We're not telling people to buy it. We're just saying, if you want to, here is our products. And so I guess it goes down to is there any responsibility at all to say, we don't need these products? And some people, places like Vanguard, said, we're not doing Bitcoin at all. So I know I'm throwing out an open-ended question here, but you get my point. He said it's sort of silly season and some of these that have happened.
I think you need an ethos to innovation in this industry. The way that we look at it is, 1, is there an investment thesis to this exposure? 2, is there client demand? Do people want this? And 3, is it suitable in an ETF? And that has really guided the type of innovation that we've done at BlackRock, and I think that suited our clients very well. Even as innovation continues to proliferate, I think there's a lot of rationale for why a lot of products are coming, but you need to have an ethos for why you're bringing this to your clients.